Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Q&A Good Night. Today is Tuesday, September 2nd. I'm analyst John Jida. Remember to like, subscribe, and share during class. If you have investment questions, comment. If I don't have time today, I'll follow up in tomorrow's class. Wonderful Tuesday. Why wonderful? US stock market was closed yesterday, Labor Day. So today, before the US stock market opens, a lot of international news, both positive and negative, will be reflected, all coming in at once. These past 2 days, since the market was closed yesterday, right? It was basically over the weekend, Saturday and Sunday. I wanted to take a break and relax. So where did I go to unwind? This time, teacher Jiang, came to Hualien, a place everyone knows. I hope to share and encourage you to get outdoors during your days off, instead of just watching markets. Market watching is done indoors. So whenever you have time off, try to take your family, friends, or even just yourself out for a walk. Last week, I happened to have a holiday, so I went to Hualien. This time, I want to recommend a place to everyone, a spot I think most people don't usually visit. It's not the famous Kixington in Hualien. I love seeing mountains and water, and I like exploring the outdoors. This place is called Baibao Creek. I'm not sure if you've heard of it, Bai as in white, and Bao as in abalone, Baibao Creek. So, about Baibao Creek, if you search for it on Google and ever get the chance to visit, you should definitely go for a walk there. The stream water is incredibly clear, you can see all the way to the bottom. And there's something really special about this place. It's famous in Hualien for producing Taiwan's well-known Fengtian jade. It's actually a jade mine, so while you're walking along the creek, swimming, or just exploring, you can pick up some pieces of jade or as souvenirs. That's one of the reasons I really like this place. I go there every year, whether it's to swim or to collect stones and minerals. If you visit Hualien to enjoy its beautiful mountains, waters, and scenery, remember that besides popular spots like Beibin, Nanbin Night Market, or Kixington, there's also Baibao Creek. The scenery there is truly stunning. The creek water is incredibly blue, deep, and clear. It's beautiful. I hope everyone has a great time. Hualien is awesome. Don't forget the daylilies. The daylily season is every August and September. I shared this last year, right? From August to October every year, it's the famous daylily season in both Hualien and Taitung. Daylilies are also known as the mother flower of China. As for daylilies, I remember that in Hualien, Yuli is especially well known for them. Up in the mountains of Yuli, like on Sika Mountain, you can find daylilies too. In Taitung, I think it's Taimali that's famous for them. So, these places, plus in Hualien, there's a spot called Wayashidan Mountain or 60 Stone Mountain. These 3 places are the main spots for daylilies. The places that produce daylilies are usually in season from August to October every year, so if you have time, you can go visit. Because, as everyone knows, in the past 6 months to a year, Hualien has been affected by things like typhoons and earthquakes, so there have been relatively fewer tourists. When I visited Hualien last week, I felt the number of tourists was about 1/3 less than usual. It's not a huge drop, but probably 1/3 less. On the bright side, it felt more intimate and relaxed. Everyone had fun, and it felt like a long time since we'd all seen each other. After coming back from Hualien, sometimes it doesn't feel like I need to go back to work. I want to keep the vacation going. Shout out to Wu Hui Wan Wan, Shishir, and tonight we have Jeffrey and Flying Fish. To Kay Coco, Harlem Jahao, Luis Young, and Alice Fu, everyone. Let's get started with live stream. We only have 4 days of streaming, but don't think it's 4 days, it's easy. 4 days of streaming, taking Monday off for Labor Day, 4 days, I'll give you preview. A lot of important economic data is going to be released this week, so it's going to have a pretty big impact on the US stock market and international markets as well. Alright, first, let's take a look at today's investment highlights. First up, a new dove might be stepping in, and this week, the big data releases are coming again. Who is this new dove? Of course, it's the newly appointed acting governor, Milan. We've talked about Milan's background with everyone before. She previously held the position of Chief Economic Advisor, and her background is actually very, very impressive. If I remember correctly, she has a PhD in economics from Harvard and is still quite young, only in her 40s. So what about Milan? Of course, she's taking over from Kugler, who left on August 8th, which was Father's Day. Now, this time, even though this new dove has already been appointed as a board member, does she actually have a chance to officially take office and participate in the September meeting? There's a chance she could, and I'll explain why in a bit. That's because Finance Minister Besant mentioned her situation briefly. Also, we'll give you a preview of this week's major data releases. From Tuesday to Friday this week, especially Thursday and Friday, there are important data releases. The Federal Reserve is paying attention to key labor market data, ADP, and non-farm payroll numbers. Non-farm payroll data will be released this Friday, with related figures like the unemployment rate. You really need to pay special attention to this. In addition, on the industry side, let me add a bit about Tesla's grand vision. When it comes to Tesla, CEO Elon Musk is constantly dreaming big. He draws up a lot of ambitious plans. Whether it's robots, autonomous driving and its successors, or things like Neuralink, the brain-machine interface revolution, SpaceX, and of course, its core business of electric vehicles, there's a lot going on. So, how will Tesla continue to develop its grand vision? It's moving into Chapter 4. Looking back at Chapters 1, 2, and 3, performance has been impressive. Most dreams Musk put forward, about 80 to 90%, have been achieved. That's quite remarkable. But what will this fourth chapter of the Grand Vision talk about? Will it provide deep, meaningful help to Tesla or the EV industry, whether Tesla's main business or something outside it? Today, I'll share related information. Also, there's a company called Starbucks. I'm not talking about their buy one get one free deals today, even though, since we're mentioning Starbucks, I'll just remind everyone about it. Although today I'm talking about RWA, let me share some news about Starbucks. They mentioned that since the new school year starts September 1st, and everyone feels a bit down about going back to school, no matter if it's elementary, middle, or university, everyone gets the blues. So, Starbucks is having another buy one get one free promotion from September 1st to 3rd, which just so happens to be during my live stream. I might not get to enjoy it myself, but that's okay. I wanted to share it with everyone. But today, we're not here to talk about buy one get one free deals. What I want to share first is that Starbucks is making a move into a very special area. So, the digital token market is called RWA. And it's not just Starbucks getting involved, Tesla is also entering this space. For Starbucks, this could have a significant impact on their future revenue, asset operations, and things like cash flow and capital flow. It could really help them make better use of their assets. So, in a bit, I'll also talk about how Starbucks and Tesla are moving into RWA, what exactly these tokens are, and what kind of impact they might have going forward. Let's dive into these related topics together. Alright, so aside from these related topics, let's not forget about the economic data, which is also really important. Today at 5 p.m., the Eurozone's August CPI year-on-year rate was released. As for the preliminary value of the year-on-year rate, the month-on-month rate is at 0%. The expected value was 0.1%, but the figure released at 5 p.m. was 0.2%. As for the year-on-year rate, it was announced at 2.1%. In fact, these numbers are pretty much in line with previous values or expectations. Overall, whether we look at the Eurozone's economic data or the inflation situation, things are relatively stable. Especially when it comes to inflation, the year-on-year rate has stayed around 2%. Of course, with inflation coming down, this is significant for the European Central Bank. The likelihood of a rate cut or the implementation of a rate cut is relatively enhanced, making it more likely that a rate cut will actually happen. Of course, we saw last week that two members of the European Central Bank's Governing Council spoke out, both saying that at this stage, since inflation continues to move closer to 2%, the situation can be considered stable. In this situation, the market might wonder whether, after several consecutive rate cuts by the European Central Bank, there will be no more cuts. But last week, I remember that two officials from the ECB specifically pointed out that the current monetary policy does not necessarily mean it will stop here. So, they refuted the market's view that the ECB might not cut rates any further, saying that there is still a possibility of more rate cuts. Therefore, monetary policy can be adjusted at any time. Of course, This is all based on economic data, including inflation and the labor market. These are all very important data points that influence the monetary policy decisions of central banks in various countries. So, this is a bit of supplementary information about the CPI and related inflation rates in the Eurozone. Inflation in the relevant European countries is still relatively stable. As for the United States, pay a bit of attention tonight at 9:45 p.m. There will be the final value of the S&P Wink with ton sticking out global manufacturing PMI for August. Both the previous value and the forecast are 53.3. In fact, whether it's in manufacturing or services, the S&P Wink with ton sticking out manufacturing PMI, the Purchasing Managers Index, has remained above 50, which indicates expansion. Generally speaking, when the index is above 50, it means the economy is relatively stable, so there's no need to be overly pessimistic. Just keep an eye on this data tonight at 9:45 to see if it can continue to stay above 50. If it does remain above 50, then there's really nothing to worry about. Of course, this applies to both the manufacturing and service sectors in the US. In terms of proportion, of course, the service sector accounts for about 60% to 70% or more, so most of it is service industry. So when we look at the US manufacturing or service PMI, usually the service PMI is slightly more important than the manufacturing PMI, because in terms of workforce distribution, the number of people employed in the US service sector is higher than in manufacturing. Of course, we need to keep an eye on tonight's manufacturing data. If it stays above 50, there's no need to worry. At 10 p.m. tonight, there's an important data release, the ISM. The previous value was 48, forecast 49. This data consistently stayed below 50, honestly, not much change. So if tonight's figure is still around 48 or 49, no need to worry. But if it drops significantly, say to 42 or even 40, that's a different story. If that happens, it would be interpreted as a negative for the US stock market. At this stage, everyone needs to have a clear understanding of these economic data points. So, what about the current economic data? Since the US stock market keeps rising, continuously hitting new historical highs, when looking at economic data now, the focus is not just on the numbers themselves. People are really paying attention to whether the good news in the economic data actually exceeds expectations and whether the economy is truly stable. That's the only way people will continue to support the current high plateau of the stock market. So, when looking at recent economic data, you have to remember, if the data falls short of expectations, the market and investors are likely to interpret it as a negative signal. So if the numbers come in too low, people will start to worry about the risk of an economic recession. After all, the major US stock indices are sitting at historical highs, so even a slightly disappointing data point can make everyone nervous and want to get out quickly. This applies to all the data coming out this week, whether it's PMI, European or US figures, as well as Friday's non-farm payrolls or Thursday's ADP private payrolls report. They all matter. If the economic data comes in better than expected, it will more or less support the US stock market, and the effect is usually pretty good. It won't cause a major pullback. But if the numbers are much worse than expected, or fall short by a lot, then you really need to be careful. Of course, everyone might have some concerns or doubts about this. Teacher, if there's bad news in the economic data, like if the economic performance is poor, or for example, if the non-farm payroll numbers are really bad and fall short of expectations, wouldn't that make the Federal Reserve think the economy is weak, and then the market would perform sluggishly? Shouldn't they cut interest rates to save the economy in that case? Logically, that's how it should be. Logically, yes, but right now the market is pretty much already anchored. It's basically already anchored that the Fed will cut rates in either September or December, no matter what. So whether or not they cut rates is already something the market has pretty much confirmed. It's almost a sure thing unless something major happens. So now that a rate cut is basically certain. So now, everyone is turning their attention to whether the economic data is stable. If it's not stable and really falls short of expectations, then the issue isn't about whether rates will be cut, because a rate cut is already the direction we're heading in. So if the economic data ends up being worse than expected, the market will actually have another force and voice. The concern is that this data could lead to a hard landing or a recession for the economy. Got it? So, every time before this economic data is released, the market atmosphere is always in flux, constantly changing. Sometimes, bad news in the data is actually favorable for rate cuts, while at other times, good economic news can instead provide support. The rise in the US stock market, right? So, this variable is something we will also track for everyone in real time, especially in our evening program before the US stock market opens. So, don't be surprised if you notice that, for example, A while ago, maybe last month or the month before, we said that bad economic data could give the Fed a chance to cut rates. But now, when people look at the data, it's the opposite. If the economic data is a bit better, there's less need to worry about a recession. So, it's a bit different now. Alright, good evening to Miss Cher, and good night to Fong Huayan as well. Also, hello to SY Lu and ST, good evening, good evening. As for whether Trump can play the firing card again, yeah, that's possible. So, back then, I think it was last week, right? Last week, on August 27th, I also went to a venue in Taipei for a speech. So I also shared with everyone that, for example, if the non-farm payroll numbers either underperform or meet expectations, since the head of the Statistics Bureau has already been replaced, when the data is released on Friday, September 5th, if the results are very good. If the non-farm payroll numbers turn out to be very good, should you believe them or not? Because they've already replaced the person in charge, the previous person has been dismissed. So if Friday's non-farm data looks really good, you have to question it, because they've changed the person in charge. And if the numbers aren't good, then you need to be even more cautious. Last week, I gave an example at a seminar. I said that this situation is kind of like when a listed company releases its financial reports. Every company, when publishing its financials, will have accountants or finance people do a bit of beautification. They might make some adjustments, not illegal, just ways to make the financial report look better. As for this act of beautifying financial reports, it's the same for everyone. Every company does it to make their reports look a bit better. This includes TSMC, UMC, or any other company, it's all the same. So you have to think, after the financial report has been beautified, when it's presented for everyone to see, and you look at those numbers. If the performance still looks bad, that means the actual situation is even worse, because these numbers have already been polished up. Okay, so on the flip side, if you see a financial report that looks great, or you see Friday's non-farm payroll numbers and they're just amazing, almost too good to be true, you also need to think the other way. With numbers this good, with such a beautiful financial report, with such impressive non-farm payroll figures, after they've been polished up, are they really true or not? Did they add a little something here and there? So when you look at these numbers, if the performance is outstanding, almost unbelievably good, just remember to take it with a grain of salt, maybe discount it by 20 to 30%. That's the prudent way to look at it. Be optimistic, but lean toward neutrality. If performance is worse than expected, then you need to be careful. Because if numbers have already been polished and they still don't look good, that means you really should start paying attention early. As for the data, at 10 p.m. tonight, besides the ISM Manufacturing Index, there's also the July Construction Spending Monthly Rate. This data is more related to real estate, and while somewhat relevant, its impact on the US stock market is not significant. Alright, Red Palace Pill, Red Palace, it's been a long time since we've seen you. Alright, regarding the previous value, for this construction spending monthly rate, the previous value was minus 0.4, and the forecast is minus 0.1. This will be released at 10 p.m. tonight. Now, for the really important data to watch this week, it's in. When the Federal Reserve holds its very important quarterly rate decision on September 18th, I've already told everyone to pay very close attention to several key economic data releases beforehand. The first one is coming up soon, September 5th, this Friday, is going to be a big one. The big event on September 5th is the non-farm payrolls report, including the US unemployment rate and average hourly earnings for non-farm workers, both monthly and yearly. These are all very important. Then, on September 10th, we have the PPI, the Producer Price Index. Why is the Producer Price Index important? If producer or supplier costs rise due to tariff issues, then inflationary pressure on prices will inevitably increase. We really need to be careful about this. On September 11th, we have the CPI, the Consumer Price Index. The inflation data released on the 10th and 11th are especially important to pay attention to. On September 18th, there's the Federal Reserve's interest rate decision. You need to be extra cautious around the release times of these key economic events. Alright, as for Finance Minister Besant, he mentioned Milan. Who is Milan? Milan, as we're talking about, is a Harvard economics PhD. So, Milan is the one taking over the position we just mentioned, replacing Kugler. Now, regarding Besant's talk, the September meeting will probably be held around September 16th or 17th, and on the 18th, they'll basically announce the details of the interest rate decision. That will be at 2 a.m. on September 18th, Taiwan time. Just to clarify, I'm referring to Taiwan time here. At 2 a.m. Taiwan time on September 18th, the Federal Reserve will announce its latest interest rate decision, whether or not there will be a rate cut. The current range is between 4.25% and 4.5%. So, for this September meeting, will Milan, the dovish board member appointed by Trump, make a difference? If there's a chance for Milan to join the voting ranks in September, of course the probability of a rate cut increases, even if just a little bit. At least, when you count it up, if Milan really does get in, there will be at least 3 dovish votes. Alright, so at least there are 3 votes. One is Milan, and the other 2 are the current Fed governors, Waller and Bowman, who made it very clear in the July meeting that they support a rate cut. Waller and Bowman are also 2 of the 11 candidates for Fed chair this time. So, among these 11 people, these are the ones who support a rate cut. Alright, and Basin also said that the Fed should be independent and remain independent, and that the Fed has made a lot of mistakes. As for Trump, previously, because of the mortgage fraud case, he fired Cook. So now, if you're Cook, he wanted to fire you, an African American. She was the first black woman at the Federal Reserve. He wanted to fire her, which led to lawsuits. Cook sued Trump and Powell, and everyone was suing each other. These lawsuits are ongoing and won't be resolved soon. Will Cook be fired? We'll have to wait and see. But no matter what happens, Besant said that if Milan has a chance to join, then at least there would be 3 representatives from the dovish side. Of course, he also mentioned things like tariffs. He thinks that the Supreme Court still has a chance, and finally, remember last week, we talked about even that. The Federal Court of Appeals announced that Trump's tariff war was invalid. That ruling said, hey, this has exceeded the president's authority. But regarding the tariffs being invalid, let me add a bit more for everyone. I think the tariffs being declared invalid, well, they said it's on hold for now. That means the tariffs can still be enforced until October 14th. After October 14th, these tariffs might become invalid. Of course, this will prompt Trump to appeal the decision to the Supreme Court. In the end, everyone might have some doubts. What exactly will happen on October 14th? Will the tariffs continue after that? Oh, I think, judging from the current situation, there's a high chance the tariffs will continue. There's a high likelihood they'll keep imposing tariffs, because actually, in the US Supreme Court, those Supreme Court justices, the judges, well, most of them are conservatives. And conservatives tend to support the idea of Make America Great Again, so they might support the US imposing tariffs on other countries based on national security concerns. No matter if it's Section 232 or whatever, or Section 301, or any number of other trade law provisions, they believe these things are mostly about protecting US national security, with that as the starting point. In this situation, these Supreme Court justices might support Trump in continuing to impose tariffs. So, I think that after October 14th, the tariff war will probably continue to be enforced, because if you don't keep it going, I think it could throw the world into chaos. So then, what has everyone been busy with from April to October? Wouldn't that all have been for nothing? So I believe that Trump or DeSantis. It's also unlikely that they'll just abruptly put an end to this. Because that would mean everything done from April to October was for nothing, all that work would be wasted, and the negotiations with other countries would have been a waste of time. So I think this should continue to be enforced at least until before October 14th. After that, I think it should be enforced this way, and the impact won't be significant. The more important thing is which industries in each country will be granted exemptions. For example, in Taiwan, the semiconductor industry might be exempted. In the US, it could be companies like Nvidia or Apple, with significant US investments. It's also possible that there will be large-scale exemptions. So, in terms of the impact on Taiwan, traditional industries might be affected more, while the semiconductor or energy industries might have a better chance of being exempted, so the impact on them would be relatively smaller. But for industries like automotive, steel, and aluminum, things might be a bit tougher. Now, let me give you a little warning. I think we've been talking about this all along, from the August shows, and we've kept reminding everyone in the evening programs, including in September. I still want to remind everyone that this is actually something to pay attention to. Well, nothing has happened yet, but if something does happen, everyone still needs to stay a bit more alert. Looking back at history, whether it's the past 5 years, 10 years, 35 years, or even 50 years, actually, every August and September, these months have always been a period when capital in the US stock market is more likely to see significant net outflows. So, every September is often a month when the S&P wink with ton sticking out index tends to decline, with a drop probability reaching as high as 50% or even over 60%. Thus, the likelihood of a downturn and associated risk are very high. Of course, many historical, risk, and seasonal factors contribute to why the US stock market is more likely to fall in September. Of course, does this mean it will definitely happen every year? Not necessarily. We can only say the probability of a decline is much higher than a rise, about 60 to 40. So, will this year repeat pattern? Again, there's still a chance for a downturn in September, so everyone should make thorough preparations. After all, if nothing happens, that's fine, but if it does, you've made adjustments to your positions, chosen your stocks carefully, and managed your funds properly. You're prepared. If September really follows the historical trend and tends to decline, then US stocks are indeed likely to fall in September, especially since we're currently at a plateau, at historic highs. The Dow Jones, S&P wink with ton sticking out 500, and Nasdaq hit new highs. With this continuous surge, expect some profit-taking pressure. So, be cautious, especially since September is the quarter-end accounting period. Pay extra attention in September. If the market drops, you need risk awareness. You don't need to short the market. Instead, you can hold your long positions or reduce your position size. If your long trades are already profitable, consider locking in profits. No need to aggressively short. Why is that? Because after the drop in September, what comes next is the Q4 market. Generally speaking, whether it's in Taiwan, the US stock market, or international markets, the probability of the market rising in Q4, the fourth quarter, is usually quite high. The chances of an upswing are really strong. That's how it's always been, but will this year be different? No one can say for sure. All we can say is, if there's a dip in September, and if the market is likely to rise in Q4, October, November, and December, then the September drop is a great opportunity to plan your positions and look for good buying points. Okay, but the premise is you sell first. You need to exit positions first. When the price drops, you'll buy at a lower point. Sell first, then buy when it drops, then you can catch the bull run in Q4. In trading strategy, if you both buy and sell, your position management and trading strategy will be much safer. So, what is UBS saying? What is UBS talking about? UBS is saying that they're warning the market, and that the market has now reached historical highs. Plus, seasonal risks usually intensify after mid-September. After mid-September, there's also the FOMC meeting, as mentioned, on September 18th. Plus, with other data like non-farm payrolls, CPI, and so on, UBS estimates that in the coming month, September, the probability of the S&P wink with tongue sticking out dropping by 5% has increased. So, it's better to be cautious. UBS mentioned that historically, prices moved similarly, so whether the market drops in September, nobody knows. But if it does go down, everyone should be prepared. Manage positions. Don't go all in, don't go all in. In the fourth quarter, if there's a chance for the market to go up, we can gradually build positions if there are dips. That would be a better approach. Okay, now moving on to the topic of tariffs, let me briefly mention it. Trump said that India has proposed to lower tariffs to 0, but he thinks it's already too late. As for whether India actually made such a proposal, nobody really knows. Trump just says whatever he wants, talking to himself and getting excited on his own. That's basically the idea. The point is, India's Prime Minister Modi suddenly spoke up. He suddenly said that India and Russia have a special relationship between their countries. So even though they're facing pressure from the United States, they still insist on maintaining economic and trade exchanges with Russia. Basically, India really wants to buy Russian crude oil, and they've bought a whole lot, constantly importing it. It's probably cheaper, and they might even be re-exporting it to make a profit. Of course, when you buy Russian crude oil, the United States really looks down on that, especially because of the Russia-Ukraine war. That's why the US has been boycotting and urging everyone not to buy Russian oil. They don't want Russia to make so much money from oil, to earn that much profit. Obviously, the reason is that this money supports Russia in buying lots of weapons to fight Ukraine. So, the US doesn't want India to buy Russian crude oil. It's as simple as that. And what about Modi? The Indian Prime Minister ignored them and said India will continue doing business as usual. He plans to cut the consumption tax by at least 10% on 175 types of goods to boost demand. Overall, I think the US is currently India's largest market anyway. This includes industries like textiles and jewelry, which are the biggest sectors. So if the import tariffs really go up and a tariff war breaks out, then India's textile and jewelry industries will be hit the hardest. But the electronics industry should be fine, because there are some exemptions for electronics, including for companies like Apple and related supply chain companies. If these products are manufactured in India and then exported to the US, they're basically exempt from the tariffs. So I don't think this will have much impact on Apple. Coming up, Apple is expected to launch the new iPhone 17 around September 9th or 10th. This launch will also provide some support for Apple's stock price, depending on what standout features the new iPhone actually has. I just wanted to add that, for now, the situation in India doesn't really have much of an impact on Apple, since they're exempt from the tariffs. As for whether India will eventually negotiate properly with the US, I think they will. In the end, they'll definitely come to an agreement. Pretty much only China has the confidence to not negotiate with the US. China is more able to negotiate with the US as equals and take things slow. For other countries, it's tough, whether it's India, the EU, Canada, Mexico, or even Northeast and Southeast Asia, like Taiwan, Japan, or South Korea. I don't think any of them have the confidence to negotiate hard with the US. It's difficult. But China can, because China has things the US needs, since it's all about mutual interests from different perspectives. Okay, the US 10-year Treasury yield and key interest rates remain unchanged from last week, around 4.27. The terminal rate is roughly 3.78. Expectations for rate cuts are about 2, maybe 2.2 times, basically hovering around that area. Overall, I think this coming month, is the key period to watch. There's a possibility that there will be a rate cut on September 18th this month, and then another one in December. So overall, I think we can still expect 1 or 2 rate cuts before the end of the year. Of course, even though the momentum and probability for a rate cut have increased by about 80%, even with this increase, the economic data shouldn't be weak. The economic data needs to stay strong, and if there are rate cuts on top of that, then the stock market will likely continue its steady upward trend. Let me say that again, just to emphasize. Right now, both September and December each have a chance for a rate cut of 0.25%, with a probability as high as 80% for each. If there are additional rate cuts in both September and December, and then we see related economic data, whether it's PNI, CPI, PPI, PCE, or non-farm unemployment rate, and so on, if these data points continue to perform steadily and remain solid. Then combined with the boost from rate cuts, the US stock market still has a chance to be pushed higher. Okay, but the premise is that what I just mentioned needs to be in place. If today there are no rate cuts in September and December, and the economic data also performs poorly, then things will get really tough. So, September's volatility will be high, and there's a reason. September reminds everyone to be aware of risks. Keep that in mind. The US dollar index rose slightly by 0.58 today, holding steady and consolidating around the 50-day moving average. Of course, that's because we're watching to see which direction the Fed's rate decision will go on September 18th. When the time comes, we'll update everyone. For now, it's basically just consolidating around the 50-day moving average. As for geopolitical risks, let's take a quick look at that as well. This dream rally in the fourth quarter, that's exactly right. Taiwan has kept things confidential for a long time, especially regarding tariffs. The details have been secret so long that even I don't really know them. I just know it's 20%. This could affect machine tools, bicycles, and products like textiles and plastics. The impact on these sectors is relatively significant. That's what we're seeing now. As for details, we'll just have to wait until the executive yuan announces them. Regarding geopolitical risks, Germany's defense minister. This is interesting. The German defense minister, what did he say? He refuted the statement by the president of the European Commission, Ursula von der Leyen. So what did von der Leyen say? Last week, von der Leyen said, European countries are not ruling out the possibility that they are planning to send troops to Ukraine to provide support, okay? Then von der Leyen also said that the matter of sending troops for support has already been discussed with Trump at the White House, and they have reached a consensus. She even said that Trump is willing to have the US serve as a backup force for the EU troops to be their support, to have their back. As soon as this was said, everyone started wondering, wow, is Europe really getting ready to send troops to help Ukraine fight the war? At this point, countries opposing this idea started to speak out. The biggest opponent? Germany. Germany has consistently refused to help Ukraine and hasn't supported this move. In fact, long ago, they had already stopped supporting it. They haven't even stated that they want to send troops to support Ukraine. None of that. There really hasn't been any genuine or active effort to help Ukraine. In contrast, countries like France, the UK, and others, or even EU figures like Ursula von der Leyen, have been more supportive of Ukraine. But the German defense minister directly said that what von der Leyen is saying doesn't represent the views of all EU member states. He believes she doesn't have the relevant authorization. Okay. So, as for what von der Leyen is talking about, whether she can really organize some kind of Europe-led force of tens of thousands of troops to march into Ukraine and help Ukraine fight, I think the chances are pretty slim. Because if it came to that, it would basically turn into a world war. It would mean European countries joining forces with Ukraine to go up against Russia, and Russia is already furious, since from the beginning, Russia never wanted this to happen. Whether it's Ukraine joining NATO or troops from other countries entering Ukraine, these are things that Russia is extremely opposed to and sensitive about. Alright, so when you say that von der Leyen really said this and is calling for tens of thousands of European troops to enter Ukraine, personally, I think the chances of that happening right now are pretty slim. But regardless, all this noise and commotion is probably going to continue. Overall, that's how it looks. The EU is basically like a loose pile of sand when it comes to this, especially regarding military support for Ukraine. Everyone has their own stance and makes their own statements. Some support, some don't. Some say they'll provide money, others say they'll send manpower. Some want to sanction Russia, and they've sanctioned it for the 18th or 19th time now, and they're still imposing sanctions. So looking at the whole picture, who is actually helping Ukraine the most? From what I can see, it's mainly the United States. The US, as the big brother, provides the most help, whether in negotiations, financial support, or supplying weapons. Their contribution is the largest. So looking at this geopolitical risk situation, there's much to discuss. Ukraine and Russia will keep dragging this out, and whether the EU can step in to help is up in the air. Remember, too many people mean too many opinions, and too many opinions mean nothing gets done. When everyone has something to say, all you hear is talk about support and aid. They talk a big game. But when it comes to the EU sending troops or buying weapons, no one actually wants to do it. That's basically the idea. Last week, when von der Leyen made statement, the EU said her plane experienced GPS interference, which they suspect Russia caused. This can be a big or small deal, depending on how you look at it. They said her GPS was disrupted, what people are saying. Now everyone is worried. What does this mean? President take a flight and crash? Or the EU send troops to help Ukraine, turn into a world war? Original price rebounded about 2% today, but honestly, it's still okay. It's staying below $65. Why is GPS interference such a serious issue? Because when a plane is about to land, doesn't it rely on GPS? Everything is computerized and automated these days, so you have to look at the whole map to figure out the route. How do you know which path to take, how to descend, and where to go? What do you do if the GPS goes out? Are you just supposed to use a paper map? Well, that day when the plane was landing, the captain actually used a paper map to figure out which spot was suitable for landing. So actually, it's dangerous. If not handled well, the plane basically loses its eyes. I think this issue will be debated. Arguments will definitely arise. As for Russia and Ukraine, those talks will just drag on. Overall, this situation affects crude oil prices. The impact isn't significant. Even though it went up 2% today, it hasn't surged above the 200-day moving average, so there's no need to overanalyze or speculate. For now, we can temporarily set aside geopolitical risks, whether Russia, Ukraine, or the Israel-Hamas situation. These geopolitical risks don't need to be our main focus. In the short term, I think the impact on the international stock markets is still manageable. Right now, the market's focus is on this Thursday's ADP report, Friday's non-farm payrolls, next week's CPI and PPI, and then the week after that, the Federal Reserve's interest rate decision on September 18th. These are the things that investors or the market are actually concerned about. As for wars breaking out somewhere else, as long as it doesn't reach the US mainland, investors generally won't pay much attention. Basically, as long as it's just conflicts on the periphery, some minor skirmishes elsewhere, as long as it doesn't hit the US mainland, then it's not really a big problem. That's basically the idea. So when it comes to geopolitical risks, people just glance at the news and move on. Now, as for the important data, today, we're saying that tonight we should pay attention to the PMI data related to the Euro and the UK, right? Also, in the US, we need to watch the S and AMP wink with tongue sticking out PMI manufacturing data and the ISM supplier data. These are all things to keep an eye on. As for tomorrow, well, let's see what else comes up. September 3rd, pay attention to China's service sector PMI, and then keep an eye on some PMI data from Europe and the US as well. Also, watch out for the US July JOLTS job openings, and take a look at the factory orders month-on-month rate. So overall, I think for Monday, Tuesday, and Wednesday, the main focus should be on the PMI Purchasing Managers Index. That should be enough. It's basically all about these things, both in Europe and the US. But you need to pay attention on Thursday. On Thursday morning, besides Kashkari's speech, even though he's not a voting member this year, there's also the Fed's beige book on economic conditions at 2 a.m., which is very important. Before the Federal Reserve makes its interest rate decision, some committee members refer to the contents of the beige book. When the time comes, we'll explain to everyone what the beige book is. Why does the beige book impact the Fed's interest rate decisions? And what effects or influence does it have? We'll discuss this and provide more information for everyone on Thursday. So on Thursday, there will also be releases like the ADP report, which is the private sector's version of the non-farm employment numbers, as well as employment-related figures. In addition, the non-manufacturing PMI and the S and AMP wink with tongue sticking out U.S. services PMI will also be announced on Thursday. Friday is important. In addition to remarks from Fed member Goolsbee, crucial data including the Eurozone's Q2 GDP, the U.S. unemployment rate, non-farm payrolls, and average hourly earnings, all announced on Friday. So this week, you really need to pay special attention to both major and minor international economic events and data, especially the data coming out on Thursday and Friday, as well as the important economic events and figures we just mentioned. These events are particularly worth watching, as they will have a significant impact on the market, so the volatility at the start of September will be quite significant. September has a lot going on. There's the interest rate decision, the non-farm payrolls, and a whole bunch of other things. Whether it's the non-farm payrolls or the CPI and other data, it's worth noting that last month the head of the U.S. Bureau of Labor Statistics was replaced. So, for this non-farm payroll number coming out on September 5th, the unemployment rate data will be scrutinized more closely by the market. Since the head of the Statistics Bureau changed, people are wondering what the data will look like. On Friday, I'll walk everyone through it. As for earnings reports, most Q2 reports have wrapped up, as they usually do around this time. Next, on September 5th and September 9th, we need to keep an eye on the earnings reports from Broadcom and Oracle. These are the reports coming out this Friday and next week. Then, on September 19th, after mid-September, we'll look at FedEx's third quarter earnings report and share it with everyone at that time. So, as for the entire second quarter earnings season, starting from NVIDIA's pretty good report at the end of last week in August, and then after Dell, Marvel, and others released their earnings, in fact, the major tech stocks' earnings reports have pretty much wrapped up. So, for now, the impact of earnings reports on the market is limited. The earnings season is basically over. At most, we just need to pay attention to Broadcom this week and Oracle next week. After that, it's really the economic data that will become the main factor affecting the market. Alright, now let's take a look at the different industry sectors. Peter is asking if there will be a big correction. It's possible, but I don't know. People say, thousands respond, but only one shows up. Like the EU situation where only one attends, Ursula von der Leyen or French President Macron. So, regardless of whether the economic data we see this week is good or bad, we still need to pay attention to proper risk management and be careful. I just wanted to remind everyone about that. Also, let me add something else. Next week, yes, next week, we are finally going to Kaohsiung to give a talk. As of now, it's tentatively scheduled for next Thursday. So, on September 11th, next Thursday, I'll be in Kaohsiung to give a talk. As for the exact time of the event, I only know the date for now. We're still not sure what time in the afternoon it will be. Once the time is confirmed, I'll let everyone know. If you're interested in information about this event, you can contact our online assistant or the relevant representative at your brokerage. As for the content of my talk next week in Kaohsiung, it will focus more on U.S. stocks, macroeconomics, and international affairs, so it'll lean more toward those topics. Otherwise, in the past, Whenever I didn't have a live stream that week, my talks at the branch offices were about Taiwan stocks and related macroeconomic topics. But next week is special. We'll be talking US stocks, the central themes, so it'll be all-encompassing, covering everything. Honestly, it's not easy. It's exhausting. One week I talk about Taiwan stocks, the next I talk about US stocks. So I alternate between Taiwan and US stocks, discussing them. That's why whenever I'm live streaming, teaching, or giving a talk, I often share things with everyone that go beyond just investing, to give everyone extra perspective. Because honestly, I think, in life or at work, aside from your job and investing, there really should be another part of your life. You need to find some balance. That's why sometimes during my live streams, I'll share with everyone things like where I went to eat or hang out last weekend, just to give you a glimpse into my life outside of work and investing. I'll share with everyone which attractions I visited, or when we're at investment events, I'll tell some little stories, maybe some historical anecdotes or things from daily life, to share with all of you. The idea is to help everyone find at least some balance between life and work, because after all, making money is important. Yeah, investing is also important, but having balance in life is important. Here is their CEO, Elon Musk. What was announced? Was there a big revision to the non-farm payroll numbers? Yes. Next week we'll take everyone to look at it again and see whether there will be a big revision or not. By Friday, we'll know if there's a big revision, no revision, or a minor adjustment. There will be some revision. The only difference is to what extent. We'll follow up by the end of the week. As for Tesla, they just released the 4th chapter of their master plan. As we mentioned at the beginning during the investment focus, in each of Tesla's master plans, from the 1st chapter to the 2nd and 3rd. Now, with this 4th chapter, let me first share my conclusion about its content. This time, the content of the 4th chapter really feels like just making grand promises. Seriously, it's just big talk. When you look at what they're saying in this 4th chapter, I honestly have no idea what they're talking about. Why is it like this? So, what exactly is in this 4th chapter of the master plan that they've released? He said, Musk put it well. He said that we are about to create products and services that bring AI into the real world. Yes, I get it. For example, things like AI GPT or versions like 3.5. For 0.0 or Anthropic, you use AI to generate images, write copy, or ask it questions, and it all works great. Indeed, AI is gradually becoming part of our lives, and in the future, humanoid robots will also need AI brains, which is really important, right? So I do believe that in the future, AI will definitely be integrated into real-world products and services. He mentioned a second point, achieving unlimited sustainable development. What does that even mean? I don't get it. I really don't. I wonder if any of you understand what that means. How do you achieve unlimited sustainable development? Unlimited just means unlimited, and sustainable means it keeps going, which is also kind of unlimited. So there are two adjectives here, unlimited and sustainable. But what exactly is being developed? I have no idea. As for the third point, he wants to accelerate the world's transition to sustainable abundance. I don't know if my Chinese isn't good or if his writing is too literary, but now on chapter 4, everything he writes feels vague and ambiguous, one thing after another. It's like a dream, kind of like he's painting a picture, so when you listen, it sounds like he's actually saying something, but in reality, he doesn't actually say anything. It's like it seems he's saying something, but when you look into it more deeply, it turns out he hasn't really said much at all. I also don't really understand why it's called accelerating the world's transition to sustainable abundance. And finally, when I got to the fourth point, that one I could understand. He says to focus on developing electric vehicles and energy products, and even includes humanoid robots, to lay the foundation for a technological renaissance. That part is definitely correct. This is a plus for his main business or even side ventures, in my opinion. But he only said he's going to work in this direction. He didn't provide details, no specifics. He didn't go into much depth, just talked about the general outline. For details, he gave a broad concept, just the general direction. I didn't see any specifics. So does that mean the future is limitless? Is that what he's getting at? I don't know. Anyway, he just kept saying unlimited and sustainable development, and that's it. Okay, Inner Mongolia Mind. After they started selling cars in India, the sales numbers in India were released. For July, they only received 600 orders, so it's below the company's expectations. For electric vehicles in Europe, Tesla's market in Europe sales have been declining. The European market is doing really poorly. So this time, When he brought up Master Plan Part 4, I can say the main focus of this master plan is probably on AI products and services, the right direction for development. Many companies are moving in this direction, developing. Focusing on AI products and services, the right move. Developing electric vehicles, energy products, humanoid robots, and related technologies, correct. Like, as for the grand dreams mentioned, look and move on, because honestly, I have no idea what they're talking about. It's vague and abstract, like playing Tai Chi with words, empty talk. But whatever, let's keep reading. In Chapter 4, with these grand ambitions. It's still not enough. It's just not practical. So moving forward, the real focus should be on whether his electric vehicles, his main business, or even his side ventures can actually develop and grow. Can his revenue and profits really rise? I think that's what would actually help his stock price, not just painting dreams or talking about vague ideals. As the saying goes, ideals are plentiful, but reality is harsh. So let's stick to looking at the real, practical side of things. So this includes things like electric vehicles, robots, as well as XAI, or Starlink, or SpaceX's Space Solo button. You need to pay some attention to all these things. As for Tesla, last Friday it dropped by 3.5%. What you should pay attention to is that it finally managed to break above the downward resistance line, but now today it's starting to dip back down again. In the past couple of days it started to touch that resistance line. It had broken through that resistance line, and once it breaks through, it will turn into support. So over the next couple of days, keep an eye on it and see if as it pulls back to retest that former resistance line, it can hold above it. If it can hold, then the resistance really does have a chance to turn into support, and that's nothing to worry about, nothing to worry about. But if it can't hold, and it breaks below all three moving averages as well as this descending resistance line, then the next place it will pull back to will be the lower edge of the original triangle consolidation area. The pressure here will be quite significant. So, keep an eye on whether this descending resistance line can hold. If it does, after some consolidation, there's a chance for another upward move. Alright, of course, the main thing still depends on what Musk is up to. Whether his main business and side ventures can actually bring in profits and stabilize the company's revenue, that's what I think is really important. It's not so much about achieving some kind of unlimited sustainable development or accelerating the world's transition to sustainable prosperity. I don't think those things will do much to help the stock price. Alright, so it's not that much help. Now, just to mention Starbucks, of course, from Monday to Wednesday this week, they're doing a buy one get one free deal. If you're in Taiwan and have a chance to go, a lot of their drinks are included in the promotion. Sometimes, coffee is pretty expensive, right? So just wait for the buy one get one free deals to get it. Now, about Starbucks. In the US, Starbucks and Starbucks in Taiwan are actually run by different companies now, so they're not quite the same. But anyway, Starbucks coffee is still pretty good. So what did Starbucks do? They issued $12 billion worth of real-world asset tokens. Real-world assets, or RWA, stand for real-world assets. Basically, that's what it means. So what are real-world assets? They're things like stocks, cash, real estate, bonds, land. All of those are real-world assets. They're things we can see, touch, and actually use, real, tangible assets. Alright, so what is an RWA token? It means taking these real-world, tangible assets and turning them into tokens. What does tokenization mean? It means digitizing them. For example, what does that mean? Starbucks is doing this now. They're taking their coffee farms in Brazil, including the land itself, put a crate of coffee beans, including future harvests and everything else, digitize all of it, and then break it down, maybe into thousands or even tens of thousands of different units, each one very small. Then what? They turn these into tokens and sell them. To whom? To investors who can subscribe to them. Alright, so as long as you subscribe, what does that mean? It means you get a share of ownership or the right to future profits from Starbucks coffee farms or coffee trees in Brazil, or even their future harvests. So what's the benefit of this? The benefit is that you can invest just a small amount of money. As an investor, you can put in a little money and still invest in Starbucks assets. Like I just mentioned, coffee trees, coffee farms, and even future harvests. What are the drawbacks? The drawback is that the token's value might fluctuate compared to the asset's physical value. They might not always be 100% in sync, and that's a risk. Also, you have to deal with things like climate change, token market volatility, and compliance with international laws all are issues. So, Starbucks issued $12 billion worth of these RWA tokens. They put them out there, and now it's up to the market to see if people will buy in. Of course, this thing has its own market demand effect. For example, Tesla, in fact, at the end of last month, or rather, on July 23rd, 2 months ago, they also issued tokens. They digitized part of the production line at their Berlin factory in Germany, and after digitizing it, they took $5 billion worth of these assets and did what? They split them into 100 million tokens, with each token. For $500, you can sell for $500, and you can become a partial owner of these assets. You can imagine what this feels like. It's similar to what we used to call REITs in the market. REIT stands for Real Estate Investment Trusts. So what does Real Estate Investment Trust actually mean? It's like this. Real estate, especially houses, are really expensive. For example, if you want to buy a commercial building today, it might cost $1 or $2 billion. That's really expensive, right? So, would an average consumer or investor be able to buy it? Of course not. It's unaffordable. So what does the insurance company or real estate company do? They take this property, which is worth about $2 billion, and split it up, maybe into 200,000 shares. Or they might split it into 1 million shares, breaking ownership into smaller pieces and issuing them on the market. The financial market allows everyone to use a little money to own a share of this commercial building. You can collect rent and benefit from the appreciation of land or property value. This is what a real estate investment trust is, taking something very expensive, dividing it into tiny pieces, and letting many investors subscribe to it. Both Starbucks and Tesla are doing this. What's the benefit? It takes something originally very expensive and breaks up the risk into small pieces, allowing hundreds of thousands or even hundreds of millions of investors to effectively do the work themselves. So what does the company do? It spreads out the risk. Originally, a production line might cost $5 billion, and the company shoulder it alone. But now, they spread it out, letting 100 million people, 100 million investors, become owners. These owners can't influence the company's management rights, because none have voting rights. They temporarily hold a tiny 100 million share of ownership and a portion of profits. So what does the company do? After spreading it out, the company gets that $5 billion back, which makes its capital operations more efficient and increases its leverage ratio further. So the leverage ratio gets even lower. So Starbucks, today, is basically learning from Tesla and doing this RWA Big B token thing. Of course, in the future, there will be more and more companies using this method to make their cash flow look better or to make it smoother. For Starbucks, when it comes to cash flow, I think it will be a plus, a positive. But for the stock price, that's not necessarily the case. I think it still comes down to their business revenue or development. Their most recent financial report was actually just okay, just average. Its second quarter revenue met expectations, but its profits fell short of expectations. Also, global same-store sales dropped by 2% year-over-year, marking the 6th consecutive quarter of decline. So even though Starbucks has changed its CEO and has been managed up to now, I think, so its stock price is still relatively volatile at the moment. This is Starbucks' weekly K-line chart. As you can see, the weekly K-line is still fluctuating along this downward pressure line, just like all the moving averages here. We haven't seen any significant breakthroughs in revenue or profit growth yet. At the moment, there really isn't any significant change, so whether issuing this $121 RWA token will make a huge difference is still uncertain. I think it might help with their capital, but as for the stock price, it seems that focusing on future revenue or store expansion and sales is still more important. For now, the stock remains relatively volatile. That's the update on Starbucks and its consumer information. Now, let's provide you with some pre-market updates on U.S. companies. Pay extra attention today. The U.S. stock market dropping is relatively high. That's because in the futures market, there are many mixed signals, including negative news and seasonal downturns in September. With today being the first day of September, U.S. stocks face heavy pressure. Few companies rose. Corning gained 1.73%, Newmont, Apache, Moderna about 1.4%. Occidental Petroleum and Southwest Airlines both gained 1%. These aren't major influential or tech stocks. Conversely, some companies dropped. KLA Corporation fell 3.7%, Carnival 3.3%, and Zillow 3.6%. Supermicro, SNCI, has internal control issues. Supermicro dropped 2.5% pre-market. These are U.S. pre-market gains and losses in the stock market, for reference. The Dow Jones Index moves upward, staying above the 20-day and 50-day moving averages. If the 20-day moving average isn't broken, there's no need to worry. For tech stocks, the Philadelphia Semiconductor Index, the more cautious, the Semiconductor Index. In addition to reaching the monthly moving average, it's now fluctuating and consolidating around the quarterly moving average. It's crucial to hold above this quarterly moving average. If it can't hold, then the next step would be a downward correction to the original long-term support zone, or it might even pull back to the annual moving average. That's to watch out for. So, pay close attention to the 50-day moving average area. It managed to hold up. But whether it can hold today is a big question. Last Friday saw a sharp drop of 3.15%. The Magnificent 7 index is not bad. At least it's staying above the 20-day monthly moving average and is gradually moving higher. So what if it drops today? Next, it might correct downward to the 50-day moving average. If it can hold at the 50-day moving average, then just treat it as a normal pullback after a strong rally. So, when it comes to the index, these are mostly pullbacks after hitting new highs. This kind of pullback might be coming in September, with a lot of different negative factors and pressure points. Everyone should pay attention to the fact that after a big rally, a pullback is still likely. And when that pullback happens, whether it's at the moving average or in individual stock performance, the differences could be huge. So, I want to remind everyone to be especially careful with your position management. Alright, that's all for group content, bringing you the latest updates before the US stock market opens. Remember to like, subscribe, and share. If you have investment questions, feel free to comment. Lastly, I wish everyone smooth trading, and I'll see you tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.